Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 7th, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to trade options and make some great profit by trading options. So let's jump in and get started. Look, from a bread and butter options trading perspective, first thing I would typically do is I would go after these big indices. Look, we got these big indices here. We got SPX, as you can see here. We got that's S&P 500. We got NDX, which is Nasdaq 100, and we got DJX, which is Dow Jones Industrial Average, and we got Russell 2000, also called RUT. These are my go-to indices for options trading, mainly because the moment you trade these index options, you get nice tax advantage. All these indices like SPX and DX, they got a 60% long-term tax advantage and 40% short-term. So if you keep on trading these on a daily basis, once you make a lot of money, that the total money or total profit that you made will be very, very beneficial from a tax perspective, because 60% of the profit will be considered long-term capital gain tax. That's why it's very favorable. This is my go-to strategy for most purposes. So typically I would look at these indices here. Look, this year has been very good, mainly because these ETFs or these indices are fluctuating. It's in the trading range for most part. Look, it's nice trading range, as you can see here. This is very good when it comes to Iron Condor type trading here. So you could trade Iron Condor and make some great money in these indices here. Look, nice trading range here. You could keep on selling, maybe say delta 10 call spread at the top here, and around delta 20 put spread at the bottom here, and make some great money consistently. And this year has been great when it comes to Russell 2000. With all these banking issues going on, it's basically great to trade this and do some Iron Condor with the delta 10 at the top and around delta say 20 at the bottom here, and you could make some good money here. And then you got Dow Jones Industrial Average, same story. This is not super liquid compared to other three here. This is my least preferred index to trade, but I would typically do other index like SPX, NDX, and RUT. One thing to keep in mind is NDX. It's got minimum spread is $25, so you should at least have $2,500 to trade NDX. SPX has got $5 wide spread. You could trade it with $500. You could trade Iron Condor. RUT, typically it's a $10 wide spread with $1,000. You could trade Iron Condor and make some good money here. And typically, folks always ask me, hey, should I go for a shorter spread or a longer spread? So I would say, at least go with the, 10 or $20 wide spread here. That will give you, you could basically book the profit earlier. If you have a tight spread like $1 or say, $3 spread, it's hard to make money quickly. I would go with at least $10 or $20 wide spread. And trade Iron Condor with the $10 or $20 wide spread. But if you're really short on the money, you could trade SPX with a $5 wide spread. You'll need some more patience because you have to wait slightly longer to make money with that. So with that, let's jump in here and look at some of these ETFs. Look, I will take you to my 25K account here. I want to grow this account to 100K. I've been working on this, so I'll typically I would, by the end of the year, this will become a 100K account. As you see here, I got a few things going on here. I got NDX. Look, from an NDX perspective, I got few Iron Condors, and look, as of now, PL, profit and loss, is 162, and I got a few more here. Look, Tesla also, and total profit right now is 556. And look, I love theta decay here in these Iron Condors. On a daily basis, I'm basically making $73 because every day, the moment you sell Iron Condors, every day there is a theta decay. As the IV rank or the implied volatility decreases, you get to keep the money. So the key thing with the Iron Condor is you have to look for a high implied volatility. Typically, I look for high VIX. VIX jumps up. Whenever market drops off big time, VIX jumps up. That's the time to sell some of these Iron Condors. And I got some vertical spreads, as you can see here. And look, I got some theta decay here, $39 between my Iron Condors and vertical spreads. This gives me around, say, $30 or so, or around $110 per day theta decay. I get to passively make some money with this theta decay here. I also have some stocks, as you can see. I got AMD here, the Lisa Su's company, and look, there's a nice profit here. And I got some Tesla here, and Tesla has been jumping up and down. Look, right now it's losing some money, but it'll come back up here. As you scan through here, I'll ladder. Right now I got some NDX. Look, all 39 days to expiration. And look, this one I sold at, trade price was $6, and right now it's $7. I would be a little bit patient on this one here. It'll be profitable pretty soon. And I got a few more Iron Condors, as you can see here. Typically, I closed some of them last week. I ladder it, so I closed the ones, the May expiration. I closed them, and now I got some with the June 16th. And as day passes along, I'll put some more Iron Condor, 45 to say 60 days out. So that way you ladder it, keep on adding Iron Condors. And look, we got few more here. We got SPX here. It's my bread and butter. Look, I'm doing, as you can see here, $10 wide spread here. And look, this also, as you can see here, even the one or two are not profitable, but overall, if you look at SPX here, we got 279 profit. As the day approaches, as the expiration day approaches, you'll see profitability increasing. That's why it's a good one here. And then you got a Tesla here. Tesla has been jumping up and down. Look, right now PL open is 116. It's a good one here. I could look at this one also here. Look, we got Iron Condor, $116. We got right now Tesla is at 170. And look, we got, as long as it stays between 260, that's my 245, that's my short call, and 135, that's my short put. We'll make a good money here. All right, so you might wonder how do I do a Iron Condor. We'll quickly look at that here and go from there. You could go into trade tab here, and I would do probably Iron Condor in RUT right now, mainly because RUT is at the middle of the range here. Look, let's bring up RUT here and go to the chart. The reason I love RUT at this hour, let's go into a one day chart here. Look, the IV rank on the Russell 2000 is 60. That's pretty high. And RSI, or relative strength index, is 48.11, middle of the range. This is when you sell Iron Condor. This tells you RSI 48 tells you this ETF is sold off. You can see right here. And IV rank 60, that tells you there is some uncertainty, volatility is high. And as you scan through here, we got RSI trying to go higher right now. This is a good way to sell Iron Condor, mainly because IV rank is pretty high. And as you look through the chart here, look, it's pretty much nice, within the trading range here. That's when you keep selling the Iron Condor and make some money here. All right, let's go into the trade tab here. And typically I would go into 39 days out. That's good enough. I could go right here and look, right now stock the ETF price is 17,1759. You could go somewhere here 1759. That's good enough. You could right click here and go sell, and you could go into Iron Condor right here. And here what I would do is I would look at delta here. Look on the puts, on the put side here. You could go around delta 20 or so here. Look, I went to delta 22. You could do the same thing here. I would do a 1660 and 1670. 1670 is our short put here. I could go here short put 1670. I can as you can see 1670, and I could let's see a short 1670, put is right here 1670, and I can buy back 1650. That's a $10 wide spread here. Look, my delta right here is 24, as you can see here. Because it's I know this pretty well. It's came down too much here. Banking will probably improve. You could go into 24, but if you're a little bit conservative, you can stay at a 20. That will also work here. Look, nice open interest, as you can see here. I would go with the 20, delta 24 here, as you can see. And now we go on the call side. Call side, I would probably go, look, I'm right here around the delta, let's see here, delta 21. But that's good enough here. It will give some room for this to bounce here. So you could be short at 1860, as you can see here. You could go 1860 short. That's what I am right now. That's good. And so actually 1860, not 1760 here. I would change this here on the call side here and do 1860 all the way down. All right, so that's the 1860, and I would buy back 18. What happened? It's 1860, not 1760 here. That's the right here, 1860, and I would buy 1870 here. Let's go down all the way here, 1870. There you go. Now we got here. Look, typically rule of thumb is really if you have a $10 wide spread, at least try to make 1/3 of the width, which is profit. Now we got a $10 wide spread. We are bringing in $5.95, which is $6. This is super aggressive for most part, but if you do management properly, you could take some profit. If you think this is super aggressive for you, you could really change it slightly and go at maybe instead of on the put side of the house here, instead of going at 24, you could go into delta 20 or so. That's also good. So what you could do now is we could go to analyze tab here. Thinkorswim platform gives great analyze tab here. You could go into analyze trade right here. Look, as you look at the analyze trade here, you could look at probability analysis. And look, ours is expiration date. Let's do one thing here. Our Iron Condor here, that's the one. You can say select all here and just look at our Iron Condor trade right here. Look, we have one Iron Condor selected here. That's the one we just sold. We are bringing in $595, and the expiration date is 16th of June, as you can see here. And I would also say here, let's set slices to break even here and day after expiration. And as you scan through here, our expiration date is 16th of June here. Keep watching 16th of June right here. Look, there is a probability of stock staying in this is 27.48%, as you can see here. And what you could also do here, you could go into a risk profile tab here. Look, from a risk profile perspective, As you can see here, we got lower probability here. The moment we do, as you can see, the moment we set slice to break even, expiration date 6/16, it kind of brings up, to break even. Iron Condor has got to break even, as many of you know here. This is the lower break even. It has to be above 1754, and then we got a upper break even, which is 1852, as you can see here. And there's a 27% chance this ETF will stay within this range here. This is pretty low percentage, as you can see here. But if you want to change this, you could go back here to the trade here, and on the put side, as an example, instead of 24 here, you could go a little bit, say around 20 here. Around 20 is ideal. You could go to 1640. You can sell 1640 and buy 1630 here. So let's do that. Oh, you know what? My put is 17 here. I should be 16. That's what's going on here. Let's say 1660, 1670 here. Let's go all the way down. 1660. There you go, 1660 and 1670. There you go. I think that's the problem here. 1660 we are selling, and 1650 we are buying back. That's the $10 white spread. This looks more like it. We are bringing in around $4, and it's a $10 white spread. This is much better. Let's do one thing. Let's go back here and analyze the trade here again, and go from there. Let's do this. Let's unselect. Let's see, Iron Condor. Let's unselect the last one here, and look, we got nice looking Iron Condor here. Current price is here, right in the almost right in the middle here, and we got nice looking Iron Condor here. So what we could do is we could go here, let's set slice to break even here, and 616. And look, this is pretty good here. Chance of stock staying in the range here is 51%, as you can see here. That's good. And we got lower break even right here. This is our lower break even, and our upper break even is right here. As long as the stock stays within these two, we will make money. And it's a nice 51.91% chance. And look, this whole range here, the gray background here, that's our one standard deviation move, which is 68.27. So this Iron Condor it's a good one, because it's a nice profit potential, around 52% profit break-even potential here. This is a good one here, and you could also go back to probability analysis here, and look, now if you see here 16th of June, if you look at 16th of June right here, 51.59 is our probability of break even. That's a good percentage here. We could really go ahead and sell this and go from there. If you want to be a little more conservative, you could basically go at delta 16 or delta 20. I would stay around delta 20, 1650. If you do that, say 1650 as an example, sell 1650 and buy 1640 here. So if you do something like this, you get a little bit less money, as you can see here, but not too less. And if you look at the analyzing this trade here, and let's go back here and uncheck this one here. Look, profitability right now is increasing slightly. That's how you could increase your profitability, by basically going after a little bit lower delta, like we're done here. So this one is a little bit lower delta. It's 22 on the short put here. Typically it's very conservative to go around 16 delta or so. You could sell a short at 16 delta or even 18 delta, and buy at say 1620. That's a little more conservative. So you could basically confirm and send this here. As you can scan through here, it will just require Look, break even profit, buying power effect. It just requires 616 your buying power effect. That's what that's saying. You're borrowing power will decrease by $616. It's a good one here. You could confirm and send this one here. So this is about this ETF or a index here. I do this all day long. Right now we'll bring in $385, and you could do this for other ETFs. As you can see here, we got few more ETFs. You could do same thing for SPX, NDX, DJX, and so on and so forth here. Sometimes what I do is really when the stock is going super high like NDX, I might sell some call spread at the top here, and obviously it will come down. When it comes down, or sell a put spread. That's again a great strategy. You're constructing Iron Condor on the fly. So you sell a call spread, make some money here. When the stock comes down, sell a put spread all the way down and make some money. That's a great strategy here. All right, so this is a bread and butter strategy. And next, look, earnings is coming up here. So as the earning comes up, one of my favorite strategy is to, buy some debit spreads. This is a good one to make some great money here. So for that, I will take you to a bar chart premier here. One of my favorite options trading platform here. It's a very cost effective. I think it's $16 per month or something if you have an annual subscription, which is a great bargain. It's got a lot of good filters, good criterias. Look, right now I'm showing you a call option buying strategy here. So look, I got some simple filters here. Look, I got from a filter perspective. I'm saying, hey, I want to look at stocks which had the earnings, say latest earnings. Basically, if you see here, what I'm doing is I'm saying from 17th of April till 5th of May, meaning last 2 weeks or so. Give me the stocks which had earnings, and I'm saying, hey, I want nice volume. I don't want to trade some no-name stocks with not too much liquidity. I want 1 month average volume to be more than 1 million shares traded. That tells you these are liquid. And market cap perspective, when you are doing the trading options, go after a little bit bigger market cap here. Look, I'm going after stocks with the 10 billion or more. I could also increase this to 40 billion. That's always a good one here. You could increase it to 40 billion. All right, now we got stock price. When you're options trading, it's always a good practice to go after a little bit higher stock price. I say over 30, it's a good one here. And because we are buying the call options or call spread, we want the relative strength index to be less than 50. That tells you these stocks have got sold off here. And profit margin, I want stock to positive profit margin over 0. That tells you these have got positive profit margin. IV rank, I want this to be less than 30. That tells you implied volatility is low, so that's why you're not paying too much premium when you buy call options. Same thing, I'm saying implied volatility less than 30, IV percentile less than 30, and open interest, I want this to be over 1,000 minimum, so that way these are liquid from an options trading perspective. Very simple criteria. I will go and see result here. I would also save this screener, so that way that criteria is available for me. And what I would do is really I would go into my options view here. I got you can create so many views here. Very nice platform here. You could go options view. Look, we got all these stocks here. My favorite way is to search based on the open interest here, sort it based on open interest. I want to look at nice and high open interest. Look, we got Pfizer right here. Pfizer completely sold off, as many of you know here. And look, RSI perspective, very low RSI 34, and in 5-day RSI is 33. It's getting even weaker. Low RSI, great. And you should also, some of these stocks have got dividend. You got to look at ex dividend date. Look, this one has got let's see here, options here. Look, latest earnings, let's see, 5.2, which already happened last week. And let's see here, I think we got nice information here. Probably one thing I would add to this screener here is the X dividend date, mainly because some of these are dividend paying stocks. You got to be slightly careful on the X dividend date. So to do that, you could go into the tools here and go into custom views, and I would select my options view here, right here, and let's see here. I would add I would basically add dividend here, and go from there, dividend. So we got, let's see here, we got next X dividend date. I would go add this, and I would also add a dividend yield. I would add that too. So that way these two are added. I would save this, and I would go back to my stocks and go to stock screener and go back to my call option here. Basically we are buying a call. There you go, buy call and see results. I would go back here to my stock option view here, and that should do the trick. Look, we got all these things here. I would sort this based on the total open interest here, and look, we got Pfizer at the top. I would collapse this here, and look, this has got X dividend date on 5/11. So you got to be slightly careful here because there is X dividend date coming around the corner. You got to be slightly careful. I would not sell call right here, whereas others like Verizon and so it could be okay. Qualcomm, it's coming a little bit later, as you can see here. And look, some of these are low, low dividend yield, like Qualcomm, with just 2%, and it got sold off here. So you could look at this screener here, and you could try to construct some trade here. And I love this because out of the huge stock market with a lot of stocks here, we are getting some 42 ideas here, 42 call buying opportunities by looking at this bar chart premier. And what would also do, I would take it to the next level here. With this platform, you could do a lot of things. I would go into the options screener here, and I would go into say we want to really do bull call debit spreads here. So I would go click on this here. I would go right here to my bull call debit spread screener here, and look, we got 34 names showed up here. And look, we could sort this. Look, we got nice looking things here, and instead of main view here, I would go into a filter view, and that will give a nice list here. And typically my favorite way is to sort based on total total call. Let's see here, open interest here. Let's look at here. We got various things going on here, probability and so on and so forth. So let's see here, filter view, that's good. So we got all these things here. I'm trying to see where is my open interest. I would probably add a open interest here. Let's go here and say open interest. Let's do that. So I want to look at total open interest here, so that way I know these have got nice open interest here. I would add this here. I will add let's see here, right here is good. So I would now I would see result here, and I would go to my filter view. That's good. And see, now we got our total open interest, right? Let's see here, total open interest right here. So I could sort by total open interest. Look, Tesla showed up at the top here. Tesla, as you can see here, we got stock price is 170, and as you scan through here, we got let's see, we will add two more things here to make this a little bit better. I would add relative strength index here. Relative strength index 14 days good. Let's go add it. So I would just go here, and I think I have 14-day relative strength index already. I would delete this one here, go delete. I would add a 5-day relative strength index here. All right, that's good. And let's see, IV rank. I think I got everything I need here. And if you look at my filters, it's very simple. I want stock price to be more than $30, as you can see here. Very simple. Relative strength below 55. I want this to be slightly sold off here. And as you can see here, we got next earnings. I'm not too much worried right now. And break-even probability about 25. And we got days to expiration 60 to 120. I want to be a little bit conservative when I sell call spread here. I have time on my side, as you see here. And we got volume, pretty good volume for the leg one. Open interest pretty good here. I would go with this here and see results. And I would also save the screener and go from there. Look, we got 34 bull call debit spread here. Debit call debit spread. We want stock to go higher. You could do Tesla. Look, Tesla at 170 right now. And as you scan through here, we got relative strength index 47%, and nice open interest here. Look at the open interest here, nice open interest here. And we are looking at $20 wide spread here. That's why, look, strike differential is $20 wide spread. Probability of break-even is 46%. And look, implied volatility rank is very low here. IV right now, Tesla is typically a little high IV, 44.70 as of now. Days to expiration 46, great. So this is a good one here. You could look at this one here. I would also add expiration date to this here. I can go back here, set filter. I would say expiration date. Right here, let's add it. So I would add this right here to expiration date right here. I will also add one more thing here. Let's say change. I want to look at the price change here, so that's why I'm adding a price change. Let's go here, latest price change. Add, I could add it right here after the price last. There you go. So I think that's good enough here. Let's save this up here. Look, we got Tesla right here. Tesla went up by $8 on Friday here. Still RSI is pretty low, 47. So it's a good one here. You could go to Thinkorswim platform and bring up Tesla here, TSLA. Look, from a Tesla perspective, it's trying to hit the middle Bollinger Band here. Strength is good. Look, but let's do one thing instead of short squeeze here. Let me bring up my different chart layout here. Look, stock is right here. Let's make it a little bit bigger here. Look, stock is somewhere trying to below the Bollinger Band, as you can see here. And look, volatility came down after the earnings. And from a MACD perspective, nothing much going on here. From a MACD perspective, slightly weaker, as you can see here. IV rank is very low, as you can see here. And what I would do in this scenario, I would probably wait for a down day, on Friday. Tesla, actually, let's bring up Tesla, not this one here. Tesla, look, Tesla, it's somewhere here, trying to near the middle band here. This looks good here. From a volatility perspective, volatility is low. Time to buy call option is when the volatility is low. And from a MACD perspective, look, it's trying to become stronger. The green line is trying to go above the yellow line. That's a good sign here. So this is a good one here. You could go here to when we saw over here, we looked at expiration date 7/21. That's good enough here. You could go to 7/21. Let me go down here. 7/21 is right here, 75 days out. And it's saying here, look, we got leg one. Let's see here, strike perspective, leg one strike 165, leg 2 strike 185. So we can do 165 185 spread here, and I could go here to 165 185 right here, and you could say buy 165 185. So it's a $20 wide spread. There you go. So we are paying $9.20. We are almost little over doubling our money here. And you could analyze this trade by taking this and say analyze trade. And let's remove all these things here. All right, let's look at our last vertical spread here, right here. Look, this vertical spread, we are looking at 7, let's see, we are looking at expiration date 7/21. So as we look through here, 7/21 right here, there is a, let's go into break even. Let's do one thing, let's set the slice to break even here, 7/22. All right, so we got our chart right here, and let's go back to the risk chart here, and let's 7/21 slash slice to break even, 7/22 here, and change this one to 7/22. There we go. So look, we got our chart right here, and looks like this one has got, as you can see here, 42% chance of breaking even. Typically, when you sell call debit spreads, any debit spread strategy typically has got a little bit less probability, but this tells you this is pretty good here. You could sell this one here, and our break even is 174. As you can see here, so this is a good strategy. You could do this. The reason I do debit spreads like this is to grow the account quickly. You sell the credit spreads to generate income, and sell debit spread to really grow an account very quickly. And as you scan through here, we got a few more here. Tesla, Google is a great one here, and we got a few more, as you can see here. Great thing about this platform, it gives you the actual the actual total open interest here. You could sort by this and look at trade the most liquid options market here. Look, we got AMD. It's a great one again. It's going higher, as you know here. Alibaba, a good one. You could look at these names here, and also look at the earnings date here. Look, we got earnings date right here. If the earnings is around the corner, then you got to be slightly careful here. By looking through this here, we got Cisco earning 517. Around 517, you could sell Iron Condor and make some good money here. So this is a great way here. You could sell some credit spread here on these ETF, on these indexes that we talked about, and then you could make some money by really buying bull call spreads here, as you can see here, and make some good money here. So with that, we'll end here. Thank you very much. Happy investing and trading. Please subscribe.